What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a look over here at the Bitcoin price chart, the XRP price chart, and the Ethereum price chart to try to get an understanding of what's going on with the price action in the cryptocurrency market after Bitcoin has now printed its fourth consecutive green monthly candle. But within the first couple of hours of the new month starting, as we are now in May, Bitcoin took a little spill along with the rest of the cryptocurrency market to kick the month off and the old wise tale of sell in May, go away. Now, I do get it that we all know that saying very well. If we go look at the past 7 years of what happens in the price action of May, we can see that last year, we knew it was red. That's when we had Luna and UST collapsing. The year prior, that's when Elon Musk stuff all happened. Then China banned the mining of Bitcoin. But then we go back to the years prior to that. We had a green May. We go back to the year prior to that. We had a green May, red, green, green. And so excluding this one as it's only the first day of May and just looking at the last 7, 4 were green, 3 were red. So while I do agree that summers are typically cruel, they're usually pretty lackluster, they're pretty boring. If we just look at the data points and see what has happened in the last 7 Mays, 4 were green, 3 were red. But obviously our most recent memories show us huge red, lots of pain. So we had big narratives that came in May of the last 2 years, so that probably sits pretty heavy in our hearts. So while I have had an idea that the price action would pull down soon, I do think it's just kind of luck that it is aligning up to happen with May. If you've been following along for the last month on my thoughts on a short squeezed, followed by a pullback, a retrace, and then head on down to a C leg, you can see we've just been kind of playing along with that so far. Bounced from the first box, so far rejected from the second box. You can see that the RSI has now broken down with this most recent move that happened earlier today on May 1st. So the strength has been lost in here. It had been kind of holding itself together, but this move did pull it back down. Another sign that things look more probable to head down to the downside. Last week when I was doing markets in the morning and I was in Austin, Texas, I had to try to kind of make my best guess on what I thought after we got back to the box, then had just an instant rejection back down to the lower box and then bounced right back up, that it seemed like a ranging kind of seems like the play to happen in here. So making sense of the actual day-to-day price action taking place in here while we're within this range. There's really not a whole lot to do in regards to saying, hey, this particular move that happens in here by going to 29,000, then going to 27,985 has a lot of significance in there. The main thing is whether or not we clear one side of the range or the other. Right now, as we could see, that 702 retracement has been the rejection level at this point. That's typically what happens before we head on down into lower prices. Truth be told, I felt pretty good about this box heading into it. Felt pretty good about this box heading into it. This one's going to be the more challenging one. Finding the lower bound of where that C leg could come to a conclusion. If this is what we end up doing, this is a much harder one to be able to guess is where that bottom is going to be. But that's for another day, because right now, still currently, we are just ranging and we could shuffle our way back up in here. Ranges by design are chaotic. Traders usually get washing machined while we're within them. But the rules are very clear on this idea. Should we take out all of the Fibonacci retracement levels, getting above $30,200, I will stay on high alert to say that something else may be at play, especially if we take out $30,500. These are the invalidation levels of this idea. 30,200, high alert. 30,500, I will scratch this. Moving on to XRP, it still has just been moving along as we've suspected for the last month, that prices have just kind of stalled out here at the top of this range after this quick breakout, the same accumulation that we had back in 2016 and 2017, just kind of waiting for this to play out. It would make sense that we do have a move down in Bitcoin if this is what's coming over here for XRP. I'm very excited for XRP. I will be accumulating as prices get lower. I have a very large accumulation range for XRP, essentially right there. Once we start getting to the lower 40s, I will accumulate it all the way down to the lower 30s. Now, as I'm sure many of you know, I actually just got back from Consensus in Austin, Texas. I had the opportunity to go to the XRPL zone there at Consensus 2023. I had the opportunity to hang out with a bunch of people there from the XRPL. I got the opportunity to meet David Schwartz from Ripple, sit there and talk with a bunch of people, and of course shake hands with people who watch the show and take pictures, and it was absolutely great. One of the main goals for me going to the XRPL zone and going to Consensus 2023 was to get a firsthand experience to see what was going on in the developer world and to get an idea on how I could get some better data and to see the stuff with my own eyes, to see, hey, we see all this stuff on the internet. Is any of it, is it real, right? To get a firsthand view of it all. And I was excited to see how much enthusiasm there was there about XRP. And of course, to get to meet David Schwartz from Ripple. I also met Matt Hamilton, formerly with Ripple, now currently with Filecoin. But one of the best speakers or panelists that I saw was here with Electric Capital, which provides reports about developer activity, which ecosystems are growing in regards to full-time, part-time, one-time developers, who's working on what blockchain, who's working on what technology. That was probably one of the most valuable things that I learned while I was there, is how to get that data. And while most coins and most projects saw a decline in developer activity over the course of the last year, from April of last year to April of this year, I am happy to report that XRP has seen a 52% increase in full-time developers on the XRP ledger. And those are things that I'm going to be paying attention to should this event eventually come, and going after the coins and the blockchains and the technology that is seeing growth in this environment, because there are some very prominent names that are seeing really big declines. And some of them were major sponsors of Consensus, but underneath the hood, they've got developers fleeing quickly. For example, Tron was the largest level sponsor at Consensus 2023. But if you think of, okay, how many full-time developers are working on Tron? Well, to give you like an example, Ethereum has 1,976 full-time developers. Polkadot has 675. Cosmos has 530. Cardano has 159. Hedera has 64. How many does Tron have? One of the top sponsors of Consensus 2023, according to Electric Capital, they have 16, which is a decline year over year. So for me, heading into this moment, it's going to be a 1, what charts look good, and 2, having my set of assets that I'm going to choose from that I've noticed that have developer growth happening within them, even in the current environment we're in right now. And I'm happy to say that XRP has a more than 50% growth in full-time developers over the course of the last year. That's great. Doesn't mean that there isn't some pain ahead if Bitcoin has the plan that it has and if XRP continues to just follow along. But again, I talk about 2023 being an optimistic year for me. You can look through the data of 2019, 2020, 2021 and see that the coins that had developer growth happening within them were the ones that really kind of performed the best in 2020 and 2021. And the ones that were seeing big declines in their development or their full-time developers struggled during 2021. So that's a great thing to see underneath the hood for XRP. I still see us having some rough time ahead, but I'm definitely optimistic for the remainder of the year. Now, one thing in addition that does get me a little concerned that this is correct is what we typically see in retracements is there's some kind of retail euphoria that does end up happening. If you remember, just 4 months ago, nobody would touch this market because 2/3 of participants believed that Bitcoin was going to $12,000. Super negative, super toxic market. Now we have the return of meme coins again. So we have people YOLOing into meme coins. One of the big ones out there is PEPE. Things that I noticed over there on PEPE, we can take a look at it here on MEXC. Here it is on Gate.io. I see absolutely classic structure in here of crash, retrace, right back to 702, reaccumulation, and then what do we do? 4.236 extension. A lot of people are chasing PEPE today. Just big cautions out there on that one as it has already gone a 4.236 extension and with Bitcoin. So we've seen euphoria return back to the market. We've seen chasing the people who are not willing to buy Bitcoin at 15,500 because they're waiting for 12,000, but they're willing to YOLO into PEPE at the top. I've gotten multiple messages today about this one. Hey, if it keeps going, if it's euphoric, hey, by all means, enjoy yourself. But just recognize from a technical behavior on this one, that is like taking the airwaves of Twitter at this point. Big markers here of things to be concerned about. And I know this will gain me a bunch of thumbs down. I know how I know how this market works. Don't talk bad about my coin. I'm just showing you the technical behavior. You had a crash, retrace, reaccumulation. You hit 4.236. There's a lot of excitement on there on Twitter today. Lots of messages coming into my inbox. Hey, maybe even I will buy PEPE, but I won't do it till way down here. Otherwise, the ship has set sail without me. But if this gets offered, hey, I'll play the game. Otherwise, that's the current state of where the market is right now. Kind of just going through the uptrend growing pains in a correction phase here in the market. It feels good to be back from Austin. It feels good to be back in my office at my desk doing my normal stuff. I've been working all weekend. On Saturday, I wrote the second newsletter of April. Crypto is very alive. A look inside. It includes a 19-minute audio narration of me reading the newsletter as well, if you prefer to listen to it in that format. Diving into a lot of my observations over there in consensus, getting an opportunity to see everything firsthand, and providing some additional data and things that I learned in there, while also looking at the progress of the cryptocurrency market. So that was published Saturday evening. That's available over there by visiting blockchainbacker.substack.com. There's also a link to it in the description of this video. That is a premium newsletter with a subscription. Otherwise, you can also follow me over here on Twitter at BCBacker. But on that note, we'll go ahead and wrap this thing up. That's going to be it for this one. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.